Let's bring in our expert. Peter McGuire joins us, Chief Market Strategist at FX Global Capital. Peter, thank you so much for joining us. Let's talk about, first and foremost, the dollar index, 20-month high. The euro is at a multi-month low. And of course, not to forget, emerging market currencies like the rupee getting hammered virtually day in, day out. First and foremost, what's your sense on how the currency market volatility is likely to be?
Well, good morning, Ashutosh. Look, a couple of quick things, and also one thing, as far as one of the 6 largest traded currencies, the Australian dollar, we're now under 98 cents. So it's certainly pretty tough out there for a lot of those currencies. Yes, going back to the US dollar, we think that it'll probably continue its upward trend. It's been a pretty heavy sell-off as far as the energy sector over the last couple of weeks, and of course gold's well back. And when you think about what's happening as far as the euro, Germany is releasing or going to sell 5 billion euros worth of bonds tomorrow, and from the Bundesbank, and they're going to be at a 0 interest rate for a 2-year bond, the first time ever. So I think you're going to see further upside for the US dollar and further sell-off for the euro, Ashutosh.
What is the, okay, we have the euro at 1.26, fell below 1.27, obviously an important support level was taken out. What is the probability now that we could see the euro-dollar equation coming to parity?
Well, I think that's a fair way off. I mean, that's a massive move, but we forecast that the euro rate against the US dollar will be probably a low of 112 this year. We wouldn't be surprised. I think that may be, considering we're now nearly at the end of May, it'd have to fall off dramatically, but certainly that'd be a downside 112, but you probably, I think it'll be under 120 by the end of the year, or sometime over that year, 118 to 115 range. So it's very, very achievable, and don't take your eye off the ball as far as what's happening with Greece, with the run on banks there. If that contagion continues as far as Spain, Portugal and Italy, and the run on their banks by investors, then I'm sure that the euro will plummet, and I think that that'll be the case.
Right. Peter, what's happening on the rupee front? In your conversation with your clients and the large FIIs, the foreign institutional investors based out of Hong Kong, Singapore, even out of some of the other emerging markets, is the rupee right now in a structural correction phase? Are we going to see a new normal for the rupee? What's the sense? What is the reason for this massive slide in the rupee right now?
Well, we've had very strong uptick to the US dollar, and that's what it's all about. I mean, also you've had a sell-off in gold, and I think that what the reality is, a lot of the currencies were overvalued. We've had also a bit of a correction as far as the Japanese yen. So, look, the rupee's been hit, but it's still going to be very hard to determine where the floor is and where the ceiling is in the short to medium term. It's a volatile currency, and it offers wonderful opportunities, of course, as far as traders, and that's what they want. They want movement. So it's hard for me to give you a forecast where I think it'll end, but I think that the choppiness and the volatility will remain for the short to medium term while the US dollar goes through these increases.
Right, Peter. Thank you so much for your time. Great chatting with you as always.